Video, I'm going to expose everything about smart money concepts. The information you're about to learn is what most people will charge you thousands of dollars for, so be ready. In this video, I'm going to be sharing market structure, supply and demand, and entries, so stay tuned. Let's start with market structure. Now, there are two real types of market structure. There are external market structure and internal market structure. What's the difference? Well, external market structure can be understood as your external swing points. So imagine you have price action that looks something like this. Now, what do we have here? Essentially, we have multiple types of structure in one. We have swing structure, which is our external structure, and then we have our internal structure, which is the internal swings of market structure. Now, our job as traders is realistically to align these two different types of structures. And this is what most people never teach about market structure. Most people just teach up and down, bullish or bearish. They don't teach the multiple time frame analysis. So let me show you what this looks like in the real market. Now, let's take the current price action that we have here, currently on GBP USD 15-minute time frame. So as it stood, essentially market structure was bullish, right? Price had just made a new higher high, and then we had a break of structure. So that break of structure right there was a break of structure to the downside. That is what shifted GBP USD on the 15-minute time frame to be bullish to bearish. Now let's go ahead and look at the market structure. So we have higher high, higher low, higher high, lower low, lower high, lower low, lower high, and then lower low. So you can actually see that those points that I've just marked up right there are what we call the swing points. How do you know when they're swing points? Pretty simple. Price will reverse from these areas. As you can see, price comes here, tops out, and then reverses. Bottoms out, reverses. Tops out, reverses. Bottoms out, reverses. Tops out, reverses. Bottoms out, reverses. Tops out, and then reverses. That's really how you can identify simply what the structure looks like externally. So we have bearish external structure. That is what we call bearish order flow. Now, the second type of structure is what we call internal structure. So internal structure, as I just mentioned to you guys, is the swing points that are internal. So let's take a look at what that looks like. So externally, we can see, let's just say hypothetically, price was like this. Sorry for my bad drawing. Let's say price was like this. Now, in this scenario, what we can see is swing point 1, swing point 2, swing point 3, higher high. So the swing structure, our reversal points on the external, was bullish, right? Until we had the shift lower low. So at that point, when price went to lower low, that is when the external shifted bearish. Now this is our internal, right? We have low, high, higher low, higher high, higher low, higher high, higher low, higher high, lower low. So that lower low right there is the first sign of a reversal. And the first sign of the reversal is what we call a change of character to the downside. Essentially the change of bullish to bearish. Characters are the directions of the market. You have bullish and you have bearish. Those are two characters. So when we change character, we're changing from bullish to bearish. And then essentially we have a lower high, lower low, break of structure, lower high, lower low, break of structure, lower high, lower low, break of structure. And then we have our swing break of structure. And then more than likely what's going to happen is we will have another change of character internally. Why? Because that change of character internally right there is essentially the confirmation that the bearish external structure is going to have a pullback. So we have something like this, right? And as you can see, price swing structure doesn't break. It respects it because that is our external structure. And then price has what? Another internal change of character because price was what? lower high, lower low, higher high, change of character, higher low, higher high, higher low, higher high, lower low, change of character. So then from there, there is going to be a level of supply. And that supply zone right there is going to actually be where we take our entries. Now, there are multiple different ways we can do this, but let's use this one. Then you're going to take your entry. Why? Because we know that external is bearish. And now we know that the internal was bullish, and now it's aligned back again with the external. So when the internal and the external aligns itself, that is when we take our trades. And that is, guys, a secret that most traders will make you pay thousands of dollars to learn. But no, not here, because we have way more to teach you than this. This is the basic stuff. So for that, let's go ahead and look at how that looks like on the charts and how we can use that to get into trades. So I guess opportunity number one would be this. So our swing structure looks like this. As you guys can very clearly see, we have shifted bearish. Now we're going on to a little bit of supply and demand. So there is the bearish. Now internally, what do we have? We have a low, high, higher low, higher high, higher low, higher high, higher low, higher high, break of structure. So that right there is a change of character to the downside. So that is the first sign of a reversal. However, guys, because at this point right here, price was bullish, we were expecting price to come in here and then make a higher high. Price didn't do that. Price actually changed character on a macro level, also on a external level. Key part of information there. So once the change of character happened externally, that is really when we understood that now we can start really looking for shorts, okay? So here's where the change of character happened. Now what we need to do is find out where it happened from. So you can see we have a higher high, higher low, lower high, lower low, change of character, lower high, and then the next low was down here. So we were actually ranging from this high right here to this low right here. And because of that, and there is only one level of supply, which is our order block, guys, and this is where we would have taken our entry. Now, you can very clearly see what defines an order block is a buy to sell that has imbalance. Imbalance simply is the first wick and the third wick do not meet each other. That leaves a gap in the market. And that gap in the market is essentially understood as a fair value gap. Simply put, that means that at that point in the market, buyers and sellers weren't able to both get a fair exchange on their order, so price will have to come back to that area and fill it. That is the purpose of a fair value gap, okay? So from there, what we do in our advanced programs is we actually drop down to a lower time frame in here and we get sniper entries. And we will take a sniper entries with a super small stop loss, and we will take out this swing low down here for a very nice trade. But for this video, even this still works and is very talented and produces amazing results. We're just going to take our entry from this level right here of supply, our order block, and we're going to target this low down here. Cover the highs just a little bit, and that is pretty much a 1, 2, 4. However, here at Prosperity Academy, we don't take anything minimum to a 1 to 5, so we would have to make that a 1 to 5, and that would be our target. So as you can see, price taps in and then comes out. But let's go even deeper. Okay, so price as it comes up makes what? Higher highs. Okay, sure. How do we essentially look to get involved here? So what we need to see is a break of structure here. So you can see that the wick right here takes out the lows, momentum shift. That essentially, because we're already bearish, that is a momentum shift. That is showing to us that price wants to go lower because it's broke the low, not with a body, but because it's pro trend, it's a momentum shift. So we can get involved in the market once again. And where are we going to take our entries from, guys? Because now the internal is aligned with the external once again. So we have order number 1. And then order number 2 is going to be from the supply zone, the buy to sell with imbalance. That is going to be our next target. And that's also going to be a 1, 2, 5 as our target. Okay, awesome. So now we're in 2 positions. And this is just following the money, following the trend, playing the supply and demand zones. Okay, cool. So next, what happens? Okay, cool. Now we've had a external break of structure. Awesome. Okay, cool. So now we have a new lower high, right? This is our new lower high. This is our new lower low. So now we're ranging. We always want to mark up our range because that's what we're going to be trading to and from. We're ranging from this high to this low. So we're expecting price to pull up somewhere in and around here. I mean, ideally it would have been this supply zone right here, but not every single time does it do that. And then make a new lower low. So with that said, we can kind of understand that price bottoms out, reverses, low, and then essentially what we want to see, because if you look at the structure, you can see this is high, low, lower high, lower low, high high, lower low. So at that point, we're essentially looking and ranging from this low right here, because this is the low right here that put in this high. So once that gets broken, that is an internal realignment. Let me actually explain what that looks like, right? So that's essentially where price has made the lows. This is where the change of character was on an internal level because price was pulling back. So on the internal level, there is the change of character. And here is the low that caused it. So when that gets broken on an internal level, there is another change of character down. So that confirms that the price is overall bearish. Now we need to understand where can we get into the market. Option number 1, we can take a sell from here. So we'll put our order on like this, and we will target the lows, these lows, right? Because we're just trading structure. So we target these lows here. Or option number 2, we have what is called a range created supply. This is something I go much deeper in on inside of Prosperity Academy University. This is a range created supply, right? You could refine it down to really to the actual pivot, but we're going to use this 1, 2, 3, 4, 5, 6, 7, 8, 9 candles. It's a big enough range. This is essentially the distribution of price that actually broke and caused a change of character. So that would be another entry. And this is all about following the money. And bearing in mind, on each of these entries, we are dropping down to the lower time frames and getting better sniper entries. So again, it has to be a 1 to 5 for us to even bother taking it. And as you can see, price didn't come back to this level, so we would have just removed that order. And then, as you can see, price pretty much hits all of those take profits, as you can see. And that is just simply a couple of days worth of price action. I mean, the first trade is Wednesday, the 1st of March, and the final trade is Wednesday, the 1st of March, Tuesday, the 2nd of March. So in 2 days, there is 15 hours worth of trades, and that's just on the 15-minute time frame. If you would have dropped down to lower time frames and got what we call refined entries, that would have been a lot better risk to reward. So guys, if you did enjoy that video,